So welcome to the Tower panel. As always, this is kind of, I think, one of the highlights Steve and I always talk about and look forward to and excited to put together. Probably not just because I've always been in just the tower side, but it is. The infrastructure, it's such a key part of what we do to kind of make all this happen and put wireless together. So I want to take just 2 minutes before we get into it, because we have a really good session today to talk a lot about where we are, what we've come out of the last year, and more importantly, we love to hear from the tower executives of, where we're really going. So I want to ask, and one thing, if people that have seen the itinerary and registered, we did have Tillman's CEO. Bill was to be here and had to cancel last minute. We are delighted with his replacement and glad to have Chris Hillebrand here, who is COO of Tillman. And if you guys don't mind, I know most everyone knows you and you know them, but take this 2-minute advertisement and just tell a little bit about your company. I stole the part of your introduction. What's your tower company? What's really your role? And just that little bit something exciting about the company that you represent. Go ahead, Chris. Yeah.
Okay, can you hear me? How's everybody doing? A little warm in here. So my name is Chris Hillebrand, and I'm the COO of Tillman Infrastructure. We are one of the fastest growing private tower cos with 2,500 plus marketable assets. We just came into operations about 3 years ago. We're based in New York, but we're spread across the country. We are very much involved in building coverage and capacity sites for our customers, as well as managing a large rooftop portfolio. We have recently started to branch out to work with the other operators and have been very active in the WISP community. In fact, we recently signed a major marketing agreement with WISPA and have been very active in that space. A little bit about what I do. I run the actual operations, the folks that go out and design, build, and operate the tower portfolio for Tillman. I also run the sales and business development team. So that's a little bit about me.
That's perfect. Bob Page.
Good morning, Bob Page. I'm with Vertical Bridge. Vertical Bridge is one of the largest private... can you guys hear me? Okay. All right. Thanks, Ron. So Vertical Bridge is one of the largest private tower companies, one of the largest digital infrastructure companies in the country. Before yesterday, I thought we were the largest digital infrastructure company in the U.S., but mobility clearly took that title.
Yeah.
So we're one of the larger tower companies. We have 6,000 towers based in all 50 states in the U.S. We started in 2014 and have grown to the over 300,000 sites that we manage for other partners and 6,000 towers that we actually own in the U.S.
Ron?
Good morning. I'm Ron Bizik. I'm the CEO and co-founder of Tarpon Towers. Not quite as big as these guys. We're about 500 assets throughout the United States. We've been in business since 2008, and prior to that, I spent most of my life as a public tower company officer at both SBA and then at Global Signal. Our strategy is more building towers than buying. I'd like to buy, but Bob always outbids me. He wins all the buys these days. We're focused on build-to-suits primarily for the big three wireless carriers, and we expect this year to increase our portfolio by about 20%. So.
Thank you, gentlemen. Thank you for being here also. So let's kind of start out, as we've all watched technology, and most of us, Chris and you and I talked a little bit more about your background, and welcome to the tower industry. But those of us that's been in the tower industry, 20, 25, some of us, 30 years now, we've watched really technology by default morph and change from just being, you stack a piece of steel and you collect cash, as we call the old days. So technology really has played a part into morphing the tower companies. The technology's driven that we've had to open up, offer a different things, and really, and Bob, if you don't mind, I'll kind of let you start this off. There's a lot of different segments to to what we as tower owners now have to offer. You know, it isn't just macros, and there's fiber, and there's small cell, and there's data centers, and, you know, there's just stuff. So let's talk for a few minutes about, you know, one, what all you provide as your company, but why that's important. You know, are we doing it for the financial gain? Do we have to offer all these segments in today's world? Is it really just to be that solution provider to our customers? You know, talk about the broadness of where we've come.
Sure. So first, I should start out by saying Vertical Bridge is 99.5% macro towers. We spend time in node-only small cells, in building, edge data centers, but those are less than 1% of our business, and we are going to always spend the majority of our time in macro towers. Why? Because first and foremost, it's a great business. It's got a tremendous amount of tailwinds to it. We see the next 5 to 10 years of tremendous growth in the macro tower business. 5G, we've got a fourth carrier building out. We've got all this new spectrum that's been issued. So we see tremendous opportunities in the macro space. But with that being said, our customers are asking us to look at different opportunities like edge to suit and building out where we have space. Our customers are asking us to go in building in some of the smaller buildings where you don't have DAS networks. Our customers are asking us for small cells in cities where we may have macros as well. So we're absolutely going to listen to our customers. Our customers are actually asking us to look at other parts of the network to get into the RAN part and do sort of network to suit, not just cell site.
Right.
So we're absolutely going to look at and explore those opportunities with our customers, but it's really customer driven.
Yeah, the segments are there, but that doesn't drive Vertical Bridge.
Yep.
You know, Chris, what are you all playing in?
So I think very similar to Vertical, we are a customer-driven business, and primarily what we see is a macro tower demand and lease up of existing tower assets. What we've seen over the past year and a half is a request from operators specifically to begin to offer turnkey-based services. And turnkey is a loose term. It's changed over the years, but what it means today for our customers is not only the construction of the tower asset, but it's also the antenna and line installation, it's the equipment installation, it's the integration activities, it's even some basic optimization in delivering a site that's ready on air to go into the networks today. And so that's something, based on my own experience as an operator, I always wanted to see that, and now as tower companies, we're actually delivering that to our customers, which I think is very exciting and a huge opportunity for driving additional businesses into the tower space. Now we are organized, Tillman Infrastructure, like Vertical Bridge, I think, we're dedicated as a tower company building infrastructure. But we have a sister company, Tillman Networks, that we partner with to
Right.
actually deliver that end-to-end service.
Right. No, thank you,
Yep.
Chris. Ron, how do you kind of see the significance of the different, what you need to play in as a tower company?
Well, I hope that we don't have to play in everything, or I don't have a business anymore. So for those of you that are independents that don't do all those things, I still think business is good for you. It's sort of like going to a steak restaurant and being on a low-carb diet. You can pick the steak and eat that. You don't have to eat the starch. So macro towers is a pure play for us. That's where we are. We've looked at a lot of other things, but really hasn't just fit what we do. I think that the carrier, using the food analogy again, sort of goes to the buffet line and says, I'll take one of these, don't need that, 4 of those, and oh yeah, I gotta have that one. And that might be the macro site, that could be the small cell site, could be the fiber. So at the moment, I don't think you have to play in all of it to be relevant. I still think that macros, as Bob pointed out, fundamentally is the best part of this business and is core to the networks, and I think it'll persist and be that way for many years to come.
So Ron, kind of staying with that, kind of the thought of, TCF is still enough. TCF, tower cash flow, is still enough for a good, sustainable business model.
Well, I mean, you can look at it as cash flow, whether it's TCF or it's coming from the nodes or it's coming from the fiber. It's about cash flow. And when you make an investment in whatever piece of business that you're in, you're forecasting where you think that investment will be in the outer years, and you build your business model and you make that decision, and presumably you're going to be successful. At least you hope to be. I think what's important is to figure out what it is that you do it extremely well, and focus on that, not necessarily trying to be all things, not the Swiss Army knife of the industry. Some people might be built for that. Frankly, we just don't focus there, and I don't think you have to be that.
Right. And Bob, kind of I think from what you just said, saying that vertical's kind of 95% still that macro, probably safe to say that's where you make your long-term projections, correct? Yeah.
That's correct, and it's 99%. It's
99.
Literally, it's less than 1% that we spend on these other businesses, but we think it's important to be there, and we measure success on the TCF from towers.
And Chris, kind of being not new to the industry, but kind of a new, entrance in the tower field with us. What's Tillman look at that? In your long-term projections, are you banking the bank on towers only?
Yeah, TCF is the lifeblood of our business, and I think of all of our businesses ultimately. Finding ways to meet the unmet needs of the operators is key, and whether that means building fiber out to the cell site, providing the services that I described earlier, these to us are just natural ways to drive additional revenue into the company on top, driving additional margin in. But macro towers is the foundation of our business and will continue to be for the foreseeable future. I think the one other thing I just share here with the audience from a personal perspective, having spent so much time in the operator space, if you look at the last year with COVID and the movement overall, people working indoors, working from home, it's only reemphasized how important coverage truly is. And what you see is across each of the carriers, including Dish as the new entrant, a huge investment in fortifying coverage, in going back and densifying their networks as part of 5G to have a ubiquitous customer experience. So I really think, to build on what you said a second ago, this market is primed for growth, explosive growth over the next several years.
Right. Well, let's just going to stay with that then, Chris. We all love towers, and we all want to be 99.99% towers. We get that, or this panel. So other than the traditional carriers then, if you take out kind of T-Mobile and Verizon and AT&T, where's the next growth engine? Where is it? Where's that next growth coming to on your towers?
So I think the first one that we're seeing, and I think all of us are seeing this, is really the Dish entrance.
Right.
Their greenfield build is obviously going to fuel a lot of that growth. And we've seen that both in terms of lease-up and actually in some early discussions with them about build-to-suit opportunities that we expect to come there. What I said a second ago really, I think, holds true, which is the partnership around the WISP. The WISP are huge. If I look at last year, where did a lot of the growth come? Back when T-Mobile and Sprint had put a hold on their network deployment as they were starting to consolidate their network. You had Verizon focus very much in on the millimeter wave. It was really the WISP that fueled up the lease-up. And so we're very bullish on WISP. We've entered that partnership with WISPA. We expect to see a lot there. Although it is early days, I think private LTE networks are a reality. They're coming. We've been in discussions across several large oil and gas and utility companies in terms of their stages of rollout. We think that will be more of a lease-up rather than necessarily a BTS opportunity, but that remains to be seen based on the creditworthiness of those customers. But this is where the growth is going to come in addition to the big three.
Bob, where are they?
Yeah. Before I jump into the other carriers, I want to make a mention that what the leasing environment has been since 2014, really, is we've had one or two of the wireless carriers leasing at any given time. One and a half over the last 5-7 years, really since we started Vertical Bridge. For the first time in the history of Vertical Bridge, we're now seeing 3 with really 4 with Dish, which I think we'll talk about later, being active. So for the foreseeable future, we're fine working with the traditional 4 wireless carriers because they're keeping us very busy. With that being said, of course, there's the RDOF money and the RDOF winners out there, and they're going to need to deploy networks. We have a dedicated group which we've set up to focus on RDOF, to focus on the WISP, to focus on the non-traditional carriers. But again, I see 90+% of our incremental revenue over the next 5 to 10 years coming from the big 4, and I include Dish in that big 4.
Right. Ron, any other thoughts on just that real growth engine?
These guys covered it pretty well, but I'll be brief. I mean, I think what's germane to our business is spectrum, right? And there's a lot of spectrum that's recently been put into play. The carriers have always invested in that spectrum. It doesn't sit fallow on the shelf. There's another auction coming in October, I believe, if everything holds, and that's going to put another 100 megahertz of spectrum into play. This is going to be an amendment business primarily for many years to come, right? Carriers are going to touch towers first that exist. They will densify, so there's going to be opportunities for builds, and there will be opportunities for full-on new colo installs. But it's primarily an amendment business because they're going to touch the assets that are already in place. It would make no sense, not to. So when you think about growth, while the WISPs and some of these other add-ons are really nice, they're going to be dwarfed in comparison to the legacy business that we have and have enjoyed for the last 30 years.
Right, right. So you all kind of, as we all, I think, talk about all the time, I think we do not go through a workday without saying the word DISH. So, and each one of you touched on it a little bit. So Bob, why don't you kind of just talk about that excitement? You and I were talking previously. It's been a quarter of a century since we've had a greenfield nationwide build-out, which means Bob's been around a long time to have said that. So let's just talk about just the again, kind of that excitement about DISH. How is it really going to impact the infrastructure world? And, and also, and when? Yes, we're all getting colo now, but when does it really make an impact to us?
So DISH obviously has significant pressure on build-out requirements, very public. All of us are aware of the June 22, June 23 build-out requirements. So clearly, they're very active. They're building out a next-generation network from day one, which is incredible when you think about how technology has advanced over the last 25 years. So you think about the other three, they still have 3G technology in their network. DISH will start out from day one building out 5G. That's going to put a lot of pressure on the whole ecosystem. Obviously, the other carriers who they compete against is going to put pressure on us to learn new tricks, right? As we understand what a de novo 5G network looks like. We're starting to see some of that activity. I suspect everyone else who has towers in the room is starting to see that activity, but we're really thrilled. And I think some of the unintended consequences, which I think will all be positive, it may be a little disruptive for some of the established carriers for a while, but I think it'll be incredibly positive for the industry to have someone with a de novo current network that's building out in 2021 through 2025. And by the way, it will take them a long time to build out. This is going to be a 5 to 10 year build out cycle to really have a competitive network with AT&T, Verizon, and T-Mo. So from our perspective, we're thrilled because not only is it a lot of leasing, it's going to be a lot of leasing over a long period of time.
Ron, what's the impact? How big is this?
How do I follow that?
Yeah.
He does this to me every time we speak.
Yeah.
I really have not much to add. I mean, I would say that in theory, DISH has an incredible competitive advantage.
Right.
As Bob points out, 5G from the get-go. You also mentioned, I'm going to be redundant here, that they're not supporting a legacy network, different technologies, and probably most importantly, they're going to do it at a de minimis cost compared to what's been invested by the others. Now it's about execution, right? So that's really where you keep your eyes on the ball. We're all seeing leases. We're seeing leases signed. We've seen some installs go up, but it's about serious execution now. And can they? And I think they can. A year ago, I would have been skeptical, but I've been pleasantly surprised by the speed at which they've begun to operate and move.
Right. Chris, thoughts?
Yeah, a couple observations. So the person who's in charge of the network deployment, Dave Mayo, close personal friend. We worked together for many, many years at T-Mobile. He is one of the savviest and smartest business people, and his ability to deliver large-scale builds at absolutely efficient, minimal prices is really unparalleled in the industry. So if you would have asked me 2 years ago prior to his joining, how serious is DISH as a competitor in the marketplace? What is their funding level? How aggressive are they going to be in their plans to build and execute? Once they hired him and started filling out that team, immediately it said in my mind was they're deadly serious. They're actually going to build a network, one. And then two, as a Tillman observation, if I look at the growth in our lease up over the last 6 to 8 months, Dish has become a very significant player across our portfolio and will continue to grow over time. And given where we're positioned, where much of our build has been out in suburban, exurban, and rural areas, we believe that we will disproportionately benefit from their build out as they move from, say, the NFL city cores out to those areas. We will see a huge bit of growth from our business perspective coming from Dish.
Right, right. Ron, let's kind of, in Dish, we hear, one of the things is because we're coming in at the onset as a 5G, deployed network. But let's just talk about the 5G deployment. Where is it right now from a tower company perspective? How's it tracking? How do you really see the 5G deployment in terms of the time, the cost, really getting there and getting completed?
Well, it's. I think we all know it's early innings. The two carriers in particular have stuck their toes in the water in certain markets and been a little bit more market specific. I think you could say that T-Mobile's really has at the moment sort of the most vast 5G strategy, and it's really speed and data. So it's early days for any of the augmented reality and virtual driverless cars. I mean, I think those are nice things to think about, but they're way down the road. And to put a finer point on that, I think 5G evolution happens as business cases are proven. Now, the business case, if people want speed, that's there. Will they pay for it? I think so. So a lot of investment there. But what will they pay for beyond that? And that will dictate what 5G becomes, how networks are developed, how money flows to those networks. So I think early days, for sure, bright days ahead, something to be excited about, but we still need to prove out the use cases for 5G thoroughly before there's going to be a tremendous amount of material investment at one single point in time.
Right. So, Bob, this is long term. We have a lot of years to play in 5G.
Yeah, I would say so. I read an article this morning, and because I'm always focused on use cases when I think about deploying what is somewhere between $2.7 and $3.7 trillion globally as we deploy 5G. And I'm like, what's the use case? Why are you doing it? So there was this article, you guys should read it. It's 27 use cases for 5G. And the first 11 of them, I only got through 11, I didn't get through all 27. The first 11 of them don't create any revenue for the carriers. Right? It's smart cities, it's autonomous vehicles, it's enhanced experience at sporting venues, it's more efficiency at sporting venues. And you started reading these use cases, and I'm like, where's the revenue? And so how do you spend, $2.7 trillion or more globally without a use case? So they're going to spend that over a long period of time just because it's prudent as a business not to spend it all at once.
Right. Chris?
I would just say that 5G rollout is an arms race, and it's all about mid-band. It's all about keeping up with the other guys and the marketing slogans that you see on the TV today. And if you look at where is customer acquisition going to happen, where is the churn happening from customers, it's ultimately around pricing and it's around technical capabilities. And so I think everybody is deadly afraid to fall behind others, and ultimately that will help to drive the thesis of universal 5G everywhere. I think, again, from a Tillman perspective, part of where we're different than the big three tower cos is we have transparent pricing and condo rights on our sites, and this allows the carriers to put up their 5G equipment without having to go through and renegotiate their leases with us. So we expect to see 5G rolled out very, very fast across our portfolio and make us a preferred build-to-suit vendor in many cases based on that transparency and fair pricing model that we have.
Right, right. Lot still to be learned about and seen. So let's just touch on for 1 second and a few of the questions that was posed because I kind of opened it up and let people kind of submit some topics, and we may not know or play a lot in it yet, but that's these private LTE networks that are being built. We hear it in schools, we hear it in hospitals, we hear it, different places. What do we really know about what's going on with these private networks that are being built out? And I guess more importantly for us, does that affect our infrastructure world? And Bob, I don't know if you want to take a stab at that.
Yeah. So from a vertical bridge standpoint, our customers are not asking for 5G private LTE networks. Again, remember our customers are primarily the big three wireless carriers. They're not looking for that. I happen to serve on the board of Boingo, and over at Boingo, that's a heavy topic of discussion because they're working with manufacturing companies and with the airports, obviously, and with military bases. So in that area where your customer is a smaller enterprise than the big wireless carriers, private 5G LTE networks are absolutely being asked for, and they're looking at economics around those builds, and when you're looking at enterprise.
Right. Chris or Ron, any thoughts on the network?
Yeah, just I think again, these are very early days in the private LTE networks. I have like a meeting set up today, an introductory meeting with one of the firms in the space here today. Overall, we've seen some interest in terms of existing assets in the macro tower business, but I would expect that to mature over the next couple of years. Our sister company, Tillman Digital Cities, that is focusing on the in-building, has been in much more active conversations and actively rolling out those private networks. I think there's a hope that this will be a space that grows dramatically over the next several years, but I think it's such early days. There's not much news here other than some of those private utilities, oil and gas companies that are looking very specific use cases there.
Right. Okay. Let's move to kind of a different topic still within the tower world. And Bob, I'll let you take this one because this is kind of the number one. Believe it or not, this was the number one question that everyone, and I'll quote this, they said, "We're not sure what to call this, but can you talk about build to reload, build to avoid, build to move, build to go somewhere else?" So that was the terms within, did that mean you wanted to go first, Ron? Within the tower companies. And, my question would be, how, has, is, will, does this really affect our tower the infrastructure world?
So first off, I have to give a shout out to Clayton in the back of the room because he was the first one to speak to build to reload and build to avoid opportunities and the magnitude of it. So Clayton on a panel 2 or 3 years ago said, "Oh, they'll build hundreds." And of course, when you're building tens of thousands, you recognize what a small issue. It's much ado about nothing. And I think that's been borne out over the last 2 or 3 years. We've built a few. I'm sure Chris has built a few, but it really is not a topic of conversation that we spend a lot of time on. And it grabs great headlines in the press, but as a reality, there's not much going on.
Ron, why don't you pick it up?
We haven't built any. I think Bob's right. This was largely a game that could be played really, really well in square states and places where zoning permitted you to build a tower, or there wasn't any zoning. There's only so many of those that exist today. I also think that the folks that were being adversely affected by these programs got smart, put a war room together, protected their assets as much as they could, as you would if it was yours. I mean, if Bob tried to overbuild me, I'd protect my asset as best I could. And maybe that forces you to have a different conversation with a carrier as a result. But I agree. I think the worst of it's past, for those that it has affected, and those opportunities become fewer and far between when you're densifying networks and you're building out in densely populated areas or they need sites in densely populated areas where you don't have, there's scarcity of available real estate, let alone zoning. So I think, as you said, Bob, I think it's more of a headline grabber than it is anything meaningful at this point.
Right, and clearly different companies have different models. So Chris, would you like to address that?
Okay, so I'm going to be the contrarian here. I think this is a huge opportunity, and although our business today is equally split between coverage and capacity and what we call HRR, high rent reload sites, We are actively building for several of our customers. And I'll tell you, more importantly, if you wind back the clock 20 years ago and you looked at the network cost as it existed, about 80% of the costs was sitting with the transport providers and the rents of the sites, and then 10%, call it headcount, and 10% everything else. And that was the OpEx pie back then. What you've seen is efficiency gains everywhere else. You have AAV providers that are building new fiber out to sites. It's become very competitive. You have people being modernized with tools and processes. But at the end of the day, the rents haven't changed. They've continued to go up. And we believe that our thesis is if you come up with simple, transparent pricing for the customer, they see the cost of the tower and they pay a fixed percentage of that. You give them a low escalator and you give them condo rights, that is a hugely attractive proposition for the operators. And I will tell you, because we have good ties into each of the C-suites of each of the 4 major carriers, is that this is top of mind for them. And so I would expect to see a lot of movement in this area over the next couple of years, because this is the one area from a cost perspective that the industry has not been able to crack. So we're not just a high rent reload company, but we see this as a very valuable space to be in, and we'll continue to be very aggressive in overbuilding where we can overbuild and providing that value for our customers at TI.
Right. And as I said, clearly different business models. Ron, comments to that?
Yeah, so I'm having a hard time hearing you, Chris, but so are you saying that without hesitation and no matter what the circumstance, you'll overbuild a site?
No, that's not what I'm saying.
I couldn't hear you.
No, that's not what I'm saying.
Because I think that the irresponsible actors out there that see brand new towers in a search ring or very close by, that then put a piece of steel up in the air, it's now a race to the bottom. And nobody's business really works. I mean, the carrier does just fine, I'm sure, but the tower company and their investors, not so much. And I would just like to point out that I think largely the build to reload, the overbuild was directed at people that aren't in this room. And I think largely the carriers have had great success at getting master lease agreements with the people in this room so that we're quote unquote friendly. And I think as tower companies, we need to be a bit more responsible to each other, the independent tower companies, and not ruin a really good business model. I don't do it to folks. I'd rather talk to the carrier first and make it go away. It's irresponsible.
And I'll add one thing to that, which is the carriers were not very busy the last 4 or 5 years. They had substantially completed 4G build out. 5G wasn't here yet. They had time to tinker around with high-cost sites and pruning their network. Now with 5G, new spectrum being deployed, this is going to move to the back burner for the carriers because they got work to do, right? They focus on this stuff when they don't really have work to do and they got to keep people busy. I see a lot less build to reload and build to avoid because they have real work to do, which is deploying 5G.
And I respectfully disagree. I think OpEx continues to be a huge issue in the industry. It's not going to go away. And ultimately, you're right. It's not the friendly tower companies that are getting overbuilt. It's those intransient tower companies that have absolutely dug in their heels and said, look, we don't care if you add equipment or take equipment off the tower, we're going to raise your rents. And that's just unsustainable. And those are the guys that are going to lose over the long term with the disruptive players in this industry.
Let's talk about something more pleasant like the pandemic, okay? Yay! So, I'm going to move these out of order. So, Ron, let's just talk about telecom has played an important role in the pandemic. We all know that. We've probably stepped up in ways, and what we do as an industry has helped that beyond what we'll ever recognize. But Ron, how have you seen, or have you, like the carriers, in terms of their plans changed, redesigns? Have you seen that it's really affected the carriers or what we're doing?
Honestly, not really. I mean, other than Zoom calls, vacant offices, crying kids, barking dogs, and an occasional flushing toilet while you're on those calls. I mean, everything was sort of business as normal. Serious. No, if anything, I think somebody pointed this out earlier, what the pandemic taught the world is that connectivity is so vital and crucial. And it left a lot of people without it when they couldn't get to work, they couldn't get to school, the kids couldn't study online, and folks were really hurt by that. So our industry has been sort of the crutches to hold these folks up where there was some connectivity. And there needs to be a great deal more of it into underserved and unserved areas in general. I think that I know that if you look at what we've done in the last year and a half through the pandemic, the tower industry and all the industries that are in the ecosystem have all done very well. I feel bad for the people whose jobs were adversely affected, but in our industry, we've been very fortunate that the trains just kept on moving. And I think for the future, it's pretty bright and portends good things given that connectivity is at the top of the list here.
Any comments, gentlemen, like in terms of you've seen their budgets affected or moved or anything? Yeah.
I just say, not really. I mean, we're blessed to be in this industry that despite COVID has continued to go on. And if anything has been shown is the ability to work from home has driven a lot of work around capacity and densification of the networks in preparation for 5G rollout everywhere. But you know, the capital spend is still very strong across all the carriers, and if anything, accelerating.
Any comments on it, Bob? Okay. We're kind of getting close to time, so those of you that's ever seen Bob and I do panels together, I try to save Bob's intelligence toward the end, and he tells us all about projections and M&A. Good topic, better than pandemic and reloads, right? So let's talk about 2022. Let's just kind of, we're halfway through here. Let's talk about it, Bob. Clearly, it seems like with the entrance of Dish and FirstNet's making it and everything. Let's talk about the colos. Let's talk about macro new builds. Any of those other segments that doesn't seem to affect your cash a lot, but what does it really look like 2022?
I see the leasing world continuing what we're already seeing in 2021, which if you look at even the public companies are now giving rosy forecasts for how they're seeing leasing, and we're no different. I'm sure Chris and Ron are the same. And what's driving our activity in 2021? We've got a fourth carrier building out. That's only going to continue and get more robust in 2022. They have a lot of work to do. We have a combined carrier who spent some time planning their network rollout for their new spectrum. We're starting to see activity there. That's going to obviously continue and expedite over the next several years as well. And then you've got one carrier who was an entertainment company and a carrier, and they've decided that they just want to be a carrier, and that's going to revector a lot more CapEx dollars back to wireless networks, which can only be good for us. And then the fourth carrier has been pretty steady for the last 25 years that I've been in the business. So
Right.
I think 2022 is setting up to be a year where all four carriers are spending.
Ron, you excited? Colo or build suits or what?
Yeah, so I'm not as smart as Bob, so I'm going to read these notes I took here. So let's take it carrier by carrier. You've got AT&T that's looking at accelerating their C-band deployment, 75 million pops by year-end 22, and 200 million. Oh, sorry. I start over?
Yeah.
Okay, so you take it by carrier. AT&T deploying C-band in an accelerated basis, 75 million pops by year-end 22, and 200 million by year-end 23. Verizon just spent $50 billion for 150 megahertz of spectrum, C-band spectrum. 60 meg should be free by the end of this year. They're gonna put that to work. T-Mobile, 200 million pops with 2.5 gig by year-end 21. Only 15,000 or so sites today, and ultimately looking for 60,000 sites with 2.5. And Dish building out a nationwide network. Green pasture for the next few years, for sure. It's a lot of investment, a lot of big goals these guys need to hit. And you guys in this room, you're all kind of a big deal in getting them there.
Yep. Chris?
Yeah, I can't really add much to that. You guys did a great job. I will just say this. We thought 2021 was going to be our busiest year, but already as we look to 2022, we believe that 2022 will be even bigger overall for us and for the industry as a whole, and hopefully for all of you that are part of that ecosystem, be prepared for a very, very busy 2022 because we're very, very bullish.
So let's talk about M&A, whether Bob continues to get fatter and we continue to retire, or what? What's M&A look like, seriously, in our tower world? And there's a lot of new entrants to the towers. You know, as we see, they still pop up. You know, new companies still get into this business, you know, whether they build 5 towers or 10 towers. But what does M&A look like? Take us over the next 2 years. Any big projections?
Yeah, this is going to be very short. A couple years ago, when prices were a third less than they are today, I said the industry was priced to perfection. Today, I would tell you the M&A industry is priced to absurdity. We're being very selective in the market today just because the models just don't make sense, and you know, good luck, but we're sitting on the sidelines for the most part.
Yeah. Ron, any thoughts? No? Ron likes exactly where he is, so that's okay. Ron's happy.
Look, this is not so much an M&A game anymore as it probably is a recap game for any company of any platform of size. I mean, this is a very attractive business for people to want to be in, and there are countless folks out there with oodles of money trying to find a way to get into the tower business, and they're accepting lower and lower returns. And frankly, I think Bob will agree, some of these folks have talked themselves into a business model that's just nonsensical, right? You can't put a 0.25 on every tower and exit at 28 and think that that's reality when you're building maybe in some markets that maybe you're not going to see that kind of growth. So it's easy to understand. Look, it's I think I've said this before. The tower business is sort of like the Jelly of the Month Club from Christmas Vacation. It's the gift that keeps on giving. I mean, rent comes in every month. You don't even have to get out of your PJs. Escalators come. You know, they come every year, annually. So it's easy to see why people are so excited to get into the business. But prices have gone to absurd levels. I would totally agree. It's good if you're a seller.
Yeah, I mean, to add to just follow on and put a final point on what Ron said, this is a great business. Like, don't get me wrong, this is a wonderful business, but you know, you can still overpay.
Right. Chris, any thoughts on M&A other than Tillman wants to sell?
No, these guys said it very well, and it's a great time to be a tower owner. For us, we have a very large backlog of committed sites. We're going to continue to build as fast as we can. We might selectively look at acquisitions, but in this frothy market, it's pretty hard to justify the multiples being offered these days. So it makes sense for us to build, and we'll continue to build very fast.
Any questions? Sharp, yes, sir.
I was curious, in terms of the master lease agreements over the last maybe 3 or 4 years, have you seen an evolution in that? Have they evolved to maybe make for better for the carriers in terms of the gotchas with putting more amendments and co-locations and all of that type of thing? Do you believe that that possibly the relo, high rent relo, has actually changed the dynamics a little bit for the publics, and they've softened a little bit to the carriers? Does that make any sense?
I think Sharp's question is to really address the master lease agreements. How have they changed, morphed? Has the relos affected the public guys to have to look at these? Is that correct, Sharp?
Yeah, it seems to me like I think I've seen that the terms are changing on the MLAs, and I wonder if you're seeing that, and if you're seeing that, if you have an idea why there's been an evolution.
Okay.
I'll start, and I'm sure you guys will chime in. I think we've reached the point where it's the natural maturation of an industry, and fundamentally we're real estate, right, with a technology bend on the backside. And what carrier world had been asking for many years, and a lot of us were reticent to give them, is predictability. You know, I would like to know what I'm going to pay when I sign on to your tower, and I don't want it to be a kangaroo court situation where we go behind the curtain well, I'll charge you this. And that's, unfortunately, I mean, I was part of this industry for over 30 years. That was sort of how it went for a while. And MLAs got introduced after some of the carrier portfolios sold off so that there was some more predictability. And I think it is now upon us as the way in which business gets done. And each of us have different MLAs, but I think first and foremost, what was most important, and I believe, Chris, you said this, it's really hard to hear the other guys up here, it's carrier understanding what they have rights to without any question marks. And I don't think that's a bad way to conduct business. You know, everybody can still win and get their share with more certainty.
You know, to your point, Ron, I agree with you 100% that the business is maturing. And so what we're seeing with the maturation is optimization of the MLAs is what I would call it, right? So not all the terms are unfavorable to the tower owner or to the carrier. You're just refining a lot of the terms and conditions as you're doing amendments to these MLAs. And it really does cut both ways. It's not like one side has an undue amount of leverage and is giving it away to the other side. It's that there's some things that are more important to a tower operator, there's some things that are more important to a carrier, and we're trying to accommodate each other as we're refining the MLAs through amendments.
Right. And
Do you think that better MLAs or different MLAs will actually reduce the amount of high rent reloads if AT&T is more happy with its agreements with its current towers, that it will lessen that?
I would hope so. I mean, it would be sort of disingenuous of the carrier to have you sign a much more favorable deal and then come behind you and hurt your business when you've helped theirs. And we haven't seen any of that in the MLAs that we've done. So it seems to be doing what you said.
Well, and one of the optimization terms for us as a tower operator is extending term, right? So we're making sure they're sticky as part of accommodating them on some of the things that they want.
Chris, do you want to address any of that?
Yeah, I'd just say at Tillman, we're a relatively new company. We've been around 3.5 years, so we don't have the burden of legacy MLAs that we're having to negotiate from. Our ownership team took a very progressive approach to the operators and preached fairness and transparency in terms of the lease rates. So they're very competitive. They're not always the lowest, but they're certainly not the highest. Low escalators, and again, these condo rights whereby once a tenant moves in, they have the ability to rearrange the furniture and not have to come back and pay more for the right to do that. And so our belief, our thesis is by being fair and transparent in the initial negotiation with each of these operators, that ultimately our tenants will reward us with a volume of work that will disproportionately outweigh the rest of the industry. And so far I can say the results have been very, very positive. You know, I think, again, I just say stay tuned to this area. We're the tip of the spear. We're somewhat of a disruptor in the industry, and we're not apologetic for that. We believe that ultimately it will make a fairer marketplace for all operators, all co-locators within that environment based on some of the work that we've laid out and that we've implemented.
I think we can do one more question. Yeah, someone? Bob? Yes, sir. I'll get that. You'll need a microphone. Hold on. Yeah, hold on.
Good morning. Bob Stapleton, National Wireless. I'm going to paint you a real quick picture. Pat's driving car number 1 and it says 5G. Ron's driving car number 2 and it says 6G with a question. Bob Page here is COVID. Not to accuse you, Bob, but you're COVID. COVID got delayed in implementing 5G. I mean, it's going on, but it's happening. The Ericssons and the Nokias and the others are manufacturing equipment and testing right now for 6G. Well, what's going to happen, I think what's going to happen is 6G is going to slam into the back of 5G. You're going to have network that's going to get their 5G deployed because they got to get it deployed.
So
And
what's
now-
the question about it?
The question is, what's going to happen when 5G and 6G collide?
Well, since he's running into me, I'm going to get hurt.
Yes, you are. You're going to get hurt. I mean, it's if it wasn't for COVID, 5G would be getting deployed at a major rate right now. But because of the delay, because of help, it got slowed down. But at the same time, the big boys are getting the equipment ready for 6G.
Bob, what I'll say is looking at some of the prices that are being paid in M&A, clearly the market believes that's going to happen. Meaning they believe leasing is going to go on at a ridiculous pace forever.
And so
Thank you.
So let's do, seriously, Steve, one more. If you'll just, can we grab that mic? One more right here.
Thank you. Hi, John Foley with Safer Buildings. So,
Can you speak up?
yeah, okay. How's that? So, Bob, we know what the Boingo strategy is for in-building, but I'm curious to hear from each of you whether you're going to move into more in-building infrastructure strategies, and what about private networks? Yeah, okay. Can you hear me now? Okay, great. So we know what Boingo is doing in building, but I'm curious to hear what each of your strategies are to expand for in-building infrastructure and maybe even private networks.
I'll go first because it's a really simple answer. I don't have one.
John, we're going where the carriers ask us to go. So 400,000 square feet buildings and lower where there's no DAS networks, we're sometimes being asked to look at those. We're helping them out. We've got some partners that we've publicly announced that we work with on some of the in-building. And so we're dabbling in it. We're learning about it, but it's by no means core.
Right. So if you have more questions, I'm sure these gentlemen would love to stay in the heat and talk to you. Thank you very much for attending, and I'd like to also just thank again Steve Nicely. When you pass him in the hall, this is a lot of work, and thank you for putting this together. Thank you.